Hi traders, welcome to a new video. Today we're going to be talking about the fail break, either breakout or breakdown setup in trading. Okay, this is a purely price action pattern that we're going to talk about. It can be applicable in any market, any time frame, but I'm going to focus it more as a swing trading strategy or as a bias on the hourly or higher time frames. And then we can use this in order to either take swing trades that are going to last a few days or a week, or just to position ourselves for like an intraday move. Okay, so what do we mean by the fail breaks? Well, pretty much is we have, let's say, a market coming down, we have a cluster of lows being made, or some kind of significant low. As we're going to see, it can be a daily low, a weekly low, a significant swing point on the chart. And then we have a move down below, and then a quick recovery back on top of this failed breakdown level. Okay, now when we look for failed breakdown or failed breakout levels, because obviously it functions either to the upside or to the downside, can be either one like this. Okay, when we're looking at this, we want to make sure that we have a legitimate failure and break back from the level. So let me just erase this here, and we're going to use another color. We're going to be focusing on the level or the clusters of the highs or lows that we're going to break through, and then when price is going to recover there. Okay, and what is happening then is that we are making a trap on liquidity beyond the lows or the highs. Okay, and this is how we know that big institutions are getting positioned, because first of all, only big large traders have the position sizing to be able to actually move the markets. So what we want to do is we want to try to tag on with them, and that levels just beyond very prominent and obvious highs and lows are areas where we know anyone that is long here, there's going to be a whole stack of, in this case, it would be buy stops, or below this sell stops, because if they're long, then they need a market sell in order to close their position as a stop. If they're short, they need a market buy. So by pushing prices through these levels, big players are engineering liquidity. They're pairing all their large, in this case, limit buy orders with all the market sell orders from the stops. Also, we're gonna catch impulsive breakout traders that might be caught on the wrong side, shorting right beyond the breakout, and then immediately getting squeezed in the other direction. Okay, but as I mark the level, it's important to make sure that we do recover above this level or below, because we could definitely, this can be the case that the market could pull back and then just retest this level as resistance, and then just make a lower high and continue lower. Or in this case, we break out, test it as support, and we continue. So it's important to see that the level is definitely accepting back beyond the level that we have the breakdown, or the, in this case, what we would call, quote, the failed or false break. Okay, so let's go into an SP 500 futures chart. This is a 1 hour chart, and we're going to be looking at the couple of past weeks action. And here in the circles, just some examples of the importance of these levels and how we can look, to participate in them. This, for example, we had this low that we made on Wednesday, February 5th. And then we had this big impulsive move that we have down here. As you can see, this was the end of the day, some tariff talks and big dump down. And then we had a big gap down open that got immediately bought up. Okay, when you see a reaction like this, especially in the overnight, you know there's some big institutions in this level looking to defend and participate. So if we go into the lower time frames, if we go into a 5-minute, you can see this was the lows that we were talking about from Wednesday overnight. And we also had this lows here right at the open on Tuesday 4th as well. We had the spike down below those two levels and then an immediate reaction back. Now, when we zoom in and we go to the Friday's action prior to the gap down, we see that we have a very prominent level of support here at the Valley area low from the session. We had the gap down below, and now we have the move back. Now, what I said, this is a very key level, and you can see we actually had a reaction from that level that we pushed down again, but we went ahead and recovered. Once we go ahead and we had this close through this level, this is now our signal that this was a failed breakdown from all this highs, all this Friday lows that we had, plus we took liquidity beyond the lows that we were looking at this 60-20 level, okay? And in this case, since we have this little structure, we can place a stop just beyond this little pullback. And then in this case, we have several targets. You could target the fill of this move from late Friday afternoon, which we got there right around the 1 a.m. time. Or, if you're looking more for swing trading, you can hold it even longer. Maybe you can hold it to the Valley area high from Friday, etc. Okay? So, when we see this price pushing through a very important level and quickly recovering, and then we start accepting back above below significant support resistance levels, then we know that we are probably in for a squeeze in the opposite direction, and we had a fail breakdown setup. The nice thing with the fail breakdown or breakout setup as well is we're not trying to just, if we have something like this and we're coming back, we're not just blindly putting a limit order here, hoping for it to hold and go. We're actually waiting for the confirmation that we are pushing beyond this level, and then we look to get back in once we are fully accepted. And remember, we're not trying to catch the exact low and high. We're just trying to get a little meat off the bone, as they say. We're just trying to get our little chunk of the movement. Then, as you can see here, we had CPI news on Wednesday morning, 8 a.m. At 8:30, the data came out. Very impulsive move down, and we actually retested exactly again that all-important 60-20 level. Then we come back, and I marked off here in gray. You can see we recovered that gap open. We marked a significant low support on the overnight on Sunday night. We pushed up on Monday. Tuesday we came and we had the lows right at those levels. We had the CPI, we reclaim, and then we come back for another retest. And this is actually an over-under pattern, which is one of my favorite reversal patterns. In this case, we're just continuing in the direction of the trend. This is also could be considered the inception of a head and shoulders, which is related to the over-under, but we just get a later signal. So in this case, the signal for the head and shoulders would have been the breakout of this neckline here for this inverted head and shoulders. But you can see the over under would have given us an earlier entry. Okay. But basically, we can see examples of this everywhere. If we go into the 15-minute, we can see here again, we had the CPI move here, very strong move down. Obviously, you know, we don't want to step out in front of this one. We want to wait for this to develop. And then you can see we push back right into these lows, and we actually had a significant rejection. We come back up, and then we start accepting, and we get two pullbacks. We don't go all the way into here, but then on the overnight during the Europe London Open, and then right before the New York Open, we have another failed breakdown here. We had this significant lows that we made here were above this level that we talked about. We have this right at London Open, a push down. We start holding, we push back up, and then right here, this failed breakdown from the lows that we made on Wednesday, regular trading hours, and then we come and we start holding again, another over under pattern right at these levels. We reclaim this 6,060 level. These lows, we come back above, clear invalidation beyond the move, the liquidity sweep down below under our cluster, and then we reclaim, and in this case we keep going. Okay, so those are just examples of what I will look for in a fail breakdown setup. Again, I hope you enjoyed this video. Hope you've all been having a great week. Remember, live streams are going to be back very soon as my move is done and I have my system all back up and running. Make sure to subscribe, hit the thumbs up, and I'll see you all in the next one.